Welcome to the first ever Real Estate of the Union Address. 2018 was a year of transition. We saw a slowing in the number of homes that were sold, and we saw a slowing in the rate of increase in the values of those homes. And folks, that sounds like bad news initially. We need to think about it as a return to sanity. The rate of increase we've seen in the last few years was just unsustainable. It was risking a bubble. A couple factors that really impacted that were the increase in mortgage interest rates. For the first time, we saw mortgage interest rates move into the upper fours and in the fives since the Great Recession. We've gotten used to these artificially low rates in the 3% range and the very low fours, and those just aren't coming back. Those are historical abnormalities. And now we're moving back to consistent, normal numbers, probably somewhere in the 5% range, in the mid-fives, what we'll see in 2019. So another factor that we saw happen was there was increased uncertainty economically, especially towards the end of the year. Starting in September, we saw some crazy movement in the stock market, and a lot of buyers pressed pause before they decided to buy something because they wanted to see how things were going to shake out. So the overall uncertainty began to take a hit on the housing market. Some of that was related to pressures from government policies. There have been some tariffs put in place by the government that make it more expensive to import wood, steel, and aluminum, all critical building products for new homes. So we've seen this shortage of supply has kind of been exacerbated by government policies and by uncertainty from investors. So all of that has made it more difficult for people to buy a home that they can afford in the first place, and that's what's caused some slowdown in the price and the number of homes sold in 2018. So shifting gears into 2019, most economists project that we're going to see our mortgage interest rates move firmly and once and for all into the mid 5% range. I've seen anywhere from about 5.4% up to about 5.8% as an average. And that seems incredibly high when we look at the last 10 years, but historically is still a very, very low rate. I remember when I bought my first home, I got it for 6.375%, and I thought I had robbed the bank. So to be in the mid-fives is still a really good, healthy rate for a mortgage. The impact of that, though, is we're going to see some people who are going to struggle to afford the home they really wanted. Last year we saw that interest rates took away about 10% of the purchasing power of buyers, and we may see some of that continued erosion in purchasing power as interest rates go up this year. So a quick takeaway if you're a buyer is, even though those rates may seem higher than you're comfortable with right now, it still is a good time to take advantage. The Federal Reserve's announced they do plan to increase rates a few more times this year, and that probably will trickle down to the mortgage industry. Now's not a bad time to continue to look into your home search and get a home that you'll look back and be really proud of your interest rate. Some other factors that are going to impact us that we'll see is we will see a slowing in the number of homes sold, and we'll see a slowing in the increase of property values. Our projection in Houston is about a 1% increase in sales and about a 3 to 4% increase in the value of homes. When the year closes out, projections are that folks in their mid-30s and their late 20s will purchase almost half of all the homes here in the United States. Almost 1 out of every 4 millennials said that they intend to buy a home here in the next 12 months. So here's what that means for you if you're the owner of one of those entry-level homes. You're going to have a ton of demand for your house this year. Just like you've had in the last few years, builders are not building entry-level houses like they used to. So your home is in incredibly high demand because the supply is so short. You can still expect to see multiple offers and relatively short days on market for your property. If you own one of those homes right now, not only are you going to see buyers come fairly quickly and offer good prices, but you're going to have a lot of options as you move up and upgrade your home to a mid-level or even a higher-end property. There's a lot of inventory there, and you've got good choices out there in the marketplace, and you still have really competitive interest rates that you can choose from. This year is a great year if you are a buyer or a seller to make that move happen. Even though there's some fear about a coming recession, most economists expect that that will come in 2020. So this year we know there'll be some uncertainty, but there's a little bit more expectation that 2020 is when we'll see the bigger economic ripples. Secondly, 2020 is a presidential election year. And I know it seems like we just got out of one and we're all still recovering from it, but there will be more uncertainty, there'll be more mudslinging, there'll be more confusion and more anxiety that's stirred up by our politicians running for office. And there'll be some people who will choose to sit on the sidelines because their fear has increased to that level where they want to see what happens next. So if you're sitting here thinking that this year or next year is the time to sell or the time to buy, this is the best year. This is the year that you have the best clarity about what's going to happen next. So one last person to talk about is that investor who's out there. Right now we have almost an all-time high in the number of renters who are out there in the marketplace. We're really close to an all-time high. But there's been a ton of construction for apartment complexes and multifamily properties around the country and here in the Houston area. There will be an increase in rental rates in the prices that we can charge if you're a landlord, but it's not going to be dramatic because that will be pushed down somewhat by the overall increase in supply. That said, because of the shortage of first-time homes, because of the increase in interest rates, because of the need for greater down payments since the Great Recession, if you're thinking about investing in real estate that you can buy and hold, this is still a great market to do it in. The rates are still relatively cheap. You still have a lot of demand for them, and you can still charge pretty good rates from your tenants. That's our overall look at the market. The bottom line is 2019 is going to be another historically good real estate year. It won't be a crazy year like we've seen the last few years. It'll be a return to a normal, more balanced market that we'll probably see for the next few years. Something where buyers and sellers are relatively balanced with one another. If you have a real estate question, if you want to know more about what to expect from 2019, or if you want some information about some of the economists that we looked at and we researched, feel free to shoot me a message or you can give me a phone call and we'll do our best to help you out. So I hope you have a great 2019 and that you now have a good understanding that the real estate of our union is strong.